Good afternoon, traders. In this video, I'm going to try to share my rules and strategy for trading. Now, it's impossible to give you everything in one video. I'm going to go over pretty much this whole document, but there's a lot that's not even existent on this plan that kind of goes into my strategy when I trade. And I'm not trying to hide anything from anybody. I want you guys to learn from me, and I'll learn from you, and we'll all get better together. But it's just impossible to share it all in one video, but I'm going to do my best. And if you combine this with watching my live trade videos, you should be able to put together exactly what I'm looking for and what I'm doing, because I tell you everything that I can get out, and sometimes the trades happen so fast I have to just kind of give you a little piece, but I tell you everything I can that comes to mind, why I took a trade, why I took an entry, why I'm exiting, where my stop is, all that stuff. So this is my daily plan that I read every single day, and this is a living document, meaning that it changes all of the time. Usually it's like additions or modifications, and if anything, my plan continues to get stricter and continues to make me pickier about trades that I take, and that's why I'm having more success month after month with my trading. So this first paragraph right here, I just put this here today because today was kind of a weird day where, let me just show you on, am I logged in here? Yeah, let me unlock this really quick. So today was my first red day of the year, and there's my cat in the background, just ignore him. He does that on a lot of videos that I make. So let's look at the month. So these two red trades, well, this is actually 3 trades because I took 2 trades on XNet. But these are from today only, and then this is the rest of January right here. So I've been doing pretty well this month. I'm up $12, which is decent for basically a $500 account, and this is a cash account and no margin or anything like that. So I can only trade the maximum of half my account per day. So I'm pretty happy with the way this month is going so far. And this morning, what was a little bit different was that there was no real good trades for me to take between 4 and 4:30 a.m. And there have been every other day this month so far. So, and I also made a video about that right here, this video, no trade recap. That was, the stocks that I was watching and why I didn't think there were good setups to take. So check that out if you didn't watch that one already. And then later in the day, I came back, at the market open, I came back in and I was watching, let me go back to this, SOX and XNet, the same, I misspelled it here, I put ZNet, but it's XNet. So I was looking at the same 2 stocks at the open and waiting for them to break through their pre-market highs and take trades. And the only one that did was XNet, and I had one winner, one loser on that. And then SOS got really close to the pre-market high, pulled back, and I took an entry, although that's kind of outside of my plan. I took an entry, and it went against me, and I stopped out. So it was a trade I shouldn't have taken because my plan says that it needs to break through the pre-market highs, and you'll see that. But I just wanted to mention that's what this is about, and this is brand new. So let's see. This is from the Monday of the week of Christmas. I didn't take any trades in the pre-market, but I took some trades later in that day. And I was watching the pre-market between 4 and 4:30, and there was no volume whatsoever. The highest volume traded stock I remember was trading with 6,000 shares by 4:30. By 4:30, the highest volume stock was trading with 6,000 shares. The norm is over 1 million easily. So that was a red flag that I didn't recognize. I just said, okay, I can't take any trades right now, and I'll come back later and see if volume shows up. Volume did show up, but the trading was still really bad that day, and I lost every single trade I took that day, which was 6 trades in total. And so I said, you know what, if this ever happens again, if I ever see no volume at 4, from 4 to 4:30, if I don't see any volume, I'm not taking a trade the rest of the day. I don't care what happens. So that's where this is from. So these are kind of like some big overall overriding rules that I put right at the beginning of my trading plan so that I have to read them every single day. So I'm constantly reminded, because these are the things that really make a big difference, in your P&L. So then this is like a little bit older here. This is probably from like November, I think, the end of November, where I decided, you know what, the only setups that I want to take from now on are ABCD setups and pullbacks. Sorry, yeah, on the first or second pullback, and then 3 and 4 bar plays. Again, you have to watch my live trade videos. I go through all those setups as I'm taking them. I can't fit everything in this one video, otherwise this would be like an hour-long video. No backside trading. Again, I talk about that. I think I spoke about that in the video, my latest video. There was an opportunity to get in, and then I said, no, I can't do it because this is backside. So you watch my live trade videos. You will get everything that I do, and everything that I know you'll get from those. Let's see. Yeah. Then my stop is always the low of the previous candle. So that's to keep, I'm trading off the 1 minute chart. I'm trading very volatile stocks. So that might sound like a tight stop, but it really isn't. A lot of times that's 10% to maybe 20% of the price range of the price of the stock. So if the stock is $10, then, that could be a 10% range of that would be $1, right? So a $1 stop on a $10 stock is not tight. So, I try to my goal is to get around a 5% stop if, the price action allows me. So that'd be 50 cents on a $10 stock. So anyway, then I added this rule after that Monday of Christmas where I just said I took 6 trades in a row and they all failed. So I reinstated. I used to follow this rule that if I have 3 losses in a row, I stop trading for the day. But the reason I stopped that for a while was because I changed my plan to where I could only take 2 trades per session. So 2 trades in the pre-market, 2 during the day, and 2 in the aftermarket. And I figured that would be enough protection. I don't need that 3 losses in a row because how could I ever lose, 6 trades, in 3 different sessions, and I did it on that Monday. So that's when I reinstated that rule. And let's see. Yeah. So, and I'm also going to stop at $5 or around $5 because right now my account, that was when my account was at 500. Now I'm at like 537. So if I go a little bit over $5, like 537 or 540 or something like that, that's okay. But basically around $5, it will be my, max loss for the day, and I'll quit for the day no matter what happens. And again, that's gonna save my P&L because last month on that Monday of Christmas, I should have my spreadsheet pulled up from that day. Let me see. Here it is right here. Okay. So this is that crazy Monday of Christmas where I lost $13 and, I lost $13.63, right? And you can see, like, compared to my P&Ls from my green days, that's a huge loss. And I ended the month just barely green, which, to be honest, I was really happy about that because after suffering that huge loss on that Monday, I thought there's no way I'm going to recover from that, the way my other green days were going. So I was really happy just to have even that tiny bit of green at the end of the month. But where was I going with that? Because of that, I reinstated that $5 max loss. Because if I would have been going by that on that day, I would have quit after my, I think, second or third trade. I would have been right around the $5 mark. Yeah, so that's basically $3. So after my third trade, I would have hit my max loss, and then that red day would have been like 550 or something like that. So I would have ended the month theoretically about $11 or $12 above this. So let's just say like $14 green day. Again, for my account size, that's good. And considering that I'm still ironing out my plan and my strategy and all that. So this month it's much more ironed out. And let's go back to the plan here. So this is my max daily loss. It's really around $5. And then I added this max weekly will be $10. So if I ever end up $10 in the red at any point during the week, I take the rest of the week off, just reflect, review my trades, try to figure out what's going on and what I can do better the next week. Then my max monthly loss. So if at any point during the month, if I'm down $15, then I stop trading for that whole month. And again, it's just going to be like review and training and all that kind of stuff to come back stronger the next month. I haven't had to do that. I actually haven't had to do any of these max losses yet this month. So far so good. this is really where the plan starts. Like all of this stuff is kind of like big warnings and notices to just burn into my mind that I have to read every single day so that I know, okay, these are the real dangers of trading and these are the things I got to watch out for. But this is really where my plan starts. It's AON stands for all or nothing 2R trading plan, right? So all or nothing just means that either you take your profit at 2 times your risk or you stop out at 1 times your risk. And I'm doing kind of a variation on that because what I like to do, and I might change it in the future because so far it's looking like I'm just better off just selling 100% of my position at 2R or stopping 100% at 1R. But what I'm doing to kind of appease my curiosity of like, is the stock going to continue, going up after I sell at 2R, is I'm selling at 75% of my position at 2R, and then I would sell all of my position at minus 1R if it goes against me. Again, you can see that throughout my live trading videos. So then let's see, always know your stop and your target before entering a trade. That's super important because if you jump into a trade and you haven't already decided I'm going to stop out at $4.50, whatever it is, and my profit target is at $4.75, if you don't know those details before you enter your trade, at least even if you don't know the numbers specifically, if you know by looking at the candles, like I'm going to stop if the price goes below this candle, and then your target is going to be 2 times whatever that difference in price is. If you don't have that stuff in your head before you enter the trade, once you get in the trade, if things start whipping around on you, you're not going to know what the heck to do. The price could just drop immediately. It happens, especially with these low float stocks that are on the top gainers list, the gappers. They can go crazy at any point. And if you don't have a plan before you're in the trade, then you're just going to be along for the ride. And before you know it, this thing has, you've lost like 10% of your account or 5% of your account or whatever on one trade. And then you might be bag holding if you're really new at this and you don't understand the importance of getting out when a trade goes against you. So that's really, really key. You really want to know that. You just should not be in a trade unless you know where your stop and your target is. Then these are just kind of reminders. This is kind of like me trying to, in a way, hypnotize myself into doing the right thing. And this is the thing that I'm having the most trouble with, but I'm getting better at it. Stop thinking about anything other than the 2R target and the 1R stop. So that means that, not to try to scale out before I get to 2R. And there are like very few exceptions, but I'm trying to just get very strict about that and maybe not even allow myself exceptions at some point. So I tell myself the only good outcome of a trade is taking profit at 2R or stopping out at 1R. Anything else will slowly kill the account. And the reason that's true is because let's say I scaled out or I got scared. Maybe I get in this stock and it chops around and then all of a sudden now I'm back in the green and it's only like, say, a half an R, right? Which would be like half my risk. So let's say I'm risking 50 cents on the stock and I've been red the whole time and finally it's in the profit for 25 cents. And I decide, okay, well, I'm just going to take my profit and run because now I'm finally in the green on this thing. And I just get out there for a 25 cent per share gain. And now let's say the next stock, something similar happens and it's the same 50% target and 25% loss. And I might have screwed those numbers up, but if now, let's say the stock goes all the way against me out at 1R and I stop out at 25 cents. Now I just wiped out my previous win and I'm back to break even or maybe in the red. So that's why, holding till 2R is so important because it basically allows you up to a 40% loss rate. You could be wrong 40% of the time and you're still going to be green at the end of the month or at least break even. And if you're right 50% of the time, you're going to be green at the end of the month for sure. So that's that. And then let's see. Yeah, this is just kind of another little side note. If 1R is 5% or less than the price of the stock, I must hold till 2R. So this is like kind of one of those exceptions. If I'm in a little bit more of a risky position, then depending on what the stock does, I may scale out, but it's really not a good idea. This is probably something I should just get rid of. So let's see. Yeah, again, like more notes. See, you need your plan to have like redundancy in it, and because these ideas and concepts need to be beat into your head, because when you're in a trade, and you're going to know this if you've been trading at all, you're going to know that as soon as you get in a trade, it's like you get tunnel vision and everything just flies out of your head and you forget your plan and all that kind of stuff, and you're just like focused on, oh my gosh, was this the right entry? Is this thing gonna go against me? Was this a good idea? Like all these thoughts pop into your head and you can't remember your plan. So your plan should have lots of redundancies, and then you should read your plan every day or before every single trade session, and that's what I do. And I read through all of the stuff that I just showed you, and then I at least read through this quick guide, which is very helpful. But again, there's a lot of stuff kind of in the background here that, this is only going to be helpful to you to an extent, and at least it gives you an idea of how to build your plan. But there's a lot of details missing in here that I just can't really include all at once. So this is my quick guide and my best setups. So in the pre-market, I only take the A, B, C, D and 3-bar play. I'll take a 4-bar play too. That's the same thing basically, but I'm just abbreviating that here. And so this is my kind of criteria for my setups during the pre-market. The stock has to be trading in the top 3 volume. That like I keep saying in my live trade videos, I share everything. You'll be able to put together my whole strategy by watching my live trade videos. In this exact video that I made this morning, I mentioned that in the video where, sorry, let me get back to that, where that XNet was actually not in the top 3, it was number 4. So it gave me, an entry at one point, but I was very hesitant to get in because it wasn't in the top 3. So that would have been going against my plan to take that trade, and I didn't take the trade. And it turned out it wasn't that great of a trade. It didn't get to 2R. So that's what I'm looking for. So then mark out the high of day. Then this price stuff, this depends on your account size. I want to be less than $5 because then that allows me to buy, reasonable amount of shares. Looking good on the daily chart. Again, you watch my live trade videos, I go over that. But basically, I have my 200 MA line set up on my daily chart, and if the current price that it's trading at, like I'm looking at it in the pre-market, if the pre-market price isn't above the 200 MA, then I don't even look for trades. I just delete it right away. And then you're looking for a basic, uptrend on the daily chart. So then mark out the high of day and watch for clean price action. So there's a lot to that. The high of day, that could be like the high of the aftermarket. If I'm looking at the pre-market, I want to mark out the high of the aftermarket and see if the price shoots up through the high of day, then I can get in on a pullback. Clean price action, what does that mean? I mean, again, there's so many things, so many little details, I can't go over it all in one video, but hopefully, let me just pull something up here. This is clean price action right here. Someone was asking me about this Triple D stock earlier, and I pulled it up. So this is the 5-minute chart, which I don't generally trade off of, but this is a perfect example of clean price action where you see, the general direction is up, right? The price is going up. And in combination with that, you're seeing higher lows. So the low of each candle keeps going higher, 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 higher. You get the idea. And none of the lows are breaking through the previous low of the previous candle, right? So this low is higher than this low, right? So if you saw like a wick break down way below this candle, that's not so clean, right? And the tops are doing kind of the same thing. So that is what clean price action is. Here's an example, like a microscopic example of where the price action isn't quite as clean. The wick is breaking down below. So that starts to tell you, okay, this thing might be getting ready to reverse. And it does pretty soon after that. Let's see what the 1-minute chart looks like. I can already see a lot of examples of not so clean price action. So this is pretty clean here for the same reasons that I mentioned before. Same thing here. Now it's getting a little bit dirty. One of the telltale signs of not so clean price action is this mixing of red and green candles in the middle of a trend, right? So, and you're seeing how that this candle here establishes a low, which is then broken by this one. So that's not clean price action. So that's what I mean by that. So you want to watch for clean price action because it's just easier to trade. It's showing that there's more strength in the stock. So that's that. If price action is clean, Wait until the price breaks through the high of day. I already said that, and pulls back. Excuse me. Let's see. Buy the first 1 minute candle. So all these things are like kind of if and statements, I guess. You know, if this happens, then I look for this, and then I look for that, and then finally I can do this. So if all this stuff happens, then I can buy the first 1 minute candle to make a new high after a pullback. Only if the high of day was not broken on the pullback. I'm not that strict about that one because I've seen so many times where the high of day is broken by just a little bit and then it shoots up. But so that one is kind of up in the air. I'm not sure which way I'm going to go on that in the long run. But let's see. Yeah, and then I say unless it's a 3 or 4 bar play, then enter as you would for a 3 or 4 bar play. I have videos about that. So if you don't know what I mean there, just look for my 3 bar play videos. So this is just like a quick, easy representation, just a visual reminder of kind of my ideal thing. Like let's say that that the aftermarket ended right here, and that this is the beginning of the pre-market, and let's say this is the high of the aftermarket. So I'd mark out the high of the aftermarket, and now I'm watching this thing trade in the pre-market. And at this point, I would just be watching it because it hasn't broken the high. Then once I see it break the high, now that's a signal to look for an entry. And then the safest entry is after this thing pulls back. And then say like a 1 minute candle makes a new high. Then I would enter, and hopefully this thing goes 2R after that, which is, again, based on the 2R thing is based on the previous candle. Okay, now here we are. See what I'm talking about with how long is this video already? 21 minutes and we're just scratching the surface. I'm not going to go too much further. I'm just going to go through this quick setup, and then I'll show you quickly the other pages. Look how many pages this thing is. 20 pages. I'm on page 3. So for the intraday, right, this is the market open from 9:30 on. Never trade if the price is below the high of the pre-market. That is a rule that I've instated after my month of December, which I was terrible at intraday trading in December. I mean, look at the difference here. In the pre-market, I made $15. In the intraday, I was actually about, I think, $8 red before I made this rule. I made this rule about trading intraday, and then that started here, and you can see my intraday trades. I only took 2 after making that rule, and this one was a small loss of $1.26, and this one was a nice green trade, a 5.7% return. So I made back some of the red that I had on during intraday. But before that, man, like almost all of my intraday trades were losers. Let's see. Well, you can see the sessions. See if it says intra, that's an intraday. Most of these, so look at this, all of this yellow and red. Yellow just means like I did something outside of my plan or my strategy, which that's bad. And then where I didn't, there was lots of red trades. There was only a couple of green trades intraday. So that's where that rule came from. So it's kind of the same idea as pre-market trading. Mark out. So in the pre-market, I mark out the aftermarket high. At the intraday, I mark out the pre-market high. And watch for the price and that's only if the pre-market high is higher than the aftermarket. If it's not, then I'm probably not even going to look for a trade. Then watch for the price action to break the pre-market high. So just like before, once it's broken, wait for the pullback or consolidation. And same thing, buy the first 1 minute candle to make a new high. If the price never breaks the pre-market high, don't trade. That's just a reminder. And then in the aftermarket, this is important if you want to trade in the aftermarket because it's a little bit different. You have to organize the screener by percent top gainers. I can show you that right now because right now we are in the aftermarket. So here's after hours. So normally when I'm trading pre-market or during the day, I organize by volume. That doesn't do you any good right now in the aftermarket because this volume is including the day, so the intraday and the pre-market. So it's deceptive. Like this thing looks like there's 220 million people trading it in the aftermarket. That's not true. That's from earlier in the day. So what I do is I organize by after hours top gainer. You just have to be a lot more careful because you could get into a stock that doesn't have any volume. Let me see if my aftermarket list has probably still got stuff on it from yesterday. But let's just add like the top 3 and let's see if there's actually volume in all 3 of these. So we had works, OCC, and MRUS. I go to my aftermarket watch list. Yeah, see, I've got some from the day before. Let me just get rid of those really quick. Last one. Okay, here we go. All right, so obviously, so look, MRUS was like the top 3 top gainer after market or after hours. Oh, it was. Where did it go? This happens after hours. The price probably moves so much it's no longer top 3, but that goes to show you can rewind the video and see that it was in the top 3 a second ago and now no longer is. So this is where I'm saying you have to be careful, because you still need to consider volume. You just can't organize the list by volume because it's not accurate. And here's an example. There's no volume here. That's evidenced by these dash candles, and if you hover over any of them, you see 250 shares, 14 shares, right? Where this thing, you just look over here at the volume as I go through the candles. Not a ton of volume, but much more than that MRUS. And this chart doesn't. Oh, this is on the daily chart for some reason. I guess the last time I looked at that stock. So this one looks like it has some decent volume. This would have been a great entry right here. Here's the ABCD pattern. Here's A, here's B. This is the pullback. You wait for a 1 minute candle to make a new high. So right here, these double topped at 189. So my entry would have been at 190. So I would have gotten in on this candle. And then my stop loss would have been the low of this candle, which is 183. That's a 7-cent difference. So I'd be looking for 14 cents. So 190 plus 14 is 204. So the 2R target is 204. It got hit on this very first candle. So that would have been a great example, of selling out 75% at 2R and then holding and maybe selling the rest here when the bottom of this 1 minute candle is broken. So that's it. I mean, that's really, man, that's my strategy in a nutshell. See just if there's anything. Yeah, so this is, I don't really want to go into that because that's going to add like another 5 minutes into this video. Yeah, you can just read through this stuff and you can just let me know if there's any more questions. This is a nice little note here. Make sure you read through that. And then the other stuff in this document, there's more, I don't have time to read through all this, guys. You can read through it and let me know if you have questions. Some of this stuff, like this is really important. It's always possible that there will not be a good trade to take. Excuse me. Super important. When I was a younger trader, I would just want to trade every day, look for the best possible thing. But sometimes even the best possible opportunity is not very good. So just always be aware that, if things don't look that strong, just don't trade because it's not worth it. Even if you end up missing out on something, that it's better to get in the habit of staying away when the price action doesn't look good or, the volume isn't there or whatever. If you miss those freak incidents where the stock actually does what you want it to, 1 out of 10 times, if you get in that habit of taking those trades, you're going to lose the other 9 times. So it's just not worth it. Let's see, anything else? You guys can just read through all this stuff. Yeah, some of this stuff is old. I need to update. So all the other earlier stuff that I went over, that trumps everything that is below. So if there's anything contradictory down here, just look above or, rewind the video. This is good information about watching out for reverse 3-bar plays. Check that out. This is a little bit old. I'm doing it a little different, but this really did help me for a long time just to kind of tighten things up and hold for the best entries and best opportunities. And it also saved me, when things didn't go so well, it saved me from revenge trading and FOMO trading, where you just, okay, I'm going to take up to 10 trades a day. And, you just take them back to back to back because, you have them there and you think, oh, eventually this thing's going to take off, and it never does, or you never recover from your losses. So this is a good thing for newer traders for sure. And it's having really strict rules. You can see that the rules throughout here are very strict. This is kind of like, before I start trading during the day, really before any session. This is a good rule of thumb. This is kind of more details about the setups. Most of this stuff should be pretty current. You can see strike throughs, like these were old strategies that I used to play, and or maybe I've changed the way that I play them. This is about front side entries, which I don't really do anymore. A little bit too risky. This is kind of like that quick setup guide in more detail. So there might be some good stuff there. There's some examples down here. This is a good little rule to follow. Here's some more A, B, C, D patterns, like A, B, C, and then that's D where you'd want to be in the trade. And then it starts over again, A, B, C, and then D, but it doesn't quite make it to R, I don't think, there. I'm not sure why this is here, but this is pretty ugly price action. I think this is kind of old. It's better to watch my live trade videos every day to know exactly what I'm doing and what I'm looking for, what I want for my entries, because I've only gotten stricter about it and better at picking entries. So this is a dangerous thing. A lot of people say this, not that it's not true, let your winners run and get out of losers fast. Yeah, that's true, but that's a little bit oversimplified, and that can get new traders into a lot of trouble because, we tend to kind of always hold to our stop loss. But when we start to see the winners run, we want to get out right away. We want to secure the profits. And before you know it, we've gotten out for like a few cent gain or something like that. And then the next stock that goes against us, we lose 10, 20, 30 cents on it and wiped out all those gains. And now we're in the hole. So there's a lot more detail to this than just simply letting your winners run and getting out of losers fast. Okay, now these rules here at the end, these are pretty important. Hopefully you're still sticking around. I'm not going to read through them all, but make sure you guys read them. These top three are definitely the most important, but every single one of these is pretty good. I haven't looked at all of them in a while because I've kind of got it all ingrained now. But again, if you have any questions about any of this, let me know. I know it's a lot of stuff. So when people ask me my strategy and my plan, it's kind of like, okay, do you have a couple of hours? And part of it is like reading stuff like this, and then the other part is understanding it. That's finally the end of it. So it takes a long time to understand it, and then being able to execute it is another tricky thing. So you could have the best plan, like let's say someone has, a strategy where month after month, or let's say year after year, they're consistently, increasing their account 50% or 100% or something crazy like that. If they're able to do that every year, that's obviously a good plan. They could give you that plan in writing, and you're not going to be able to do it. There's more to it than just having the plan and the strategy. You've got to be able to execute it. You have to have the psychological strength. You have to have the skills, to work your platform and all that kind of stuff, and be able to pick the stocks. All of this stuff means nothing if you can't pick the stocks. And I go over that again in every single live trade video. I go over, why the stock is on my list, and often I show you me pulling it off of the screener and all that kind of stuff. So anyway, that is more than enough for one video. We're almost at 35 minutes, so hopefully that helped. I know there was a lot of people asking for this, and be careful what you wish for, because you might be sorry now. All right, let me know if you have questions or comments below, and thank you for watching, and thanks for subscribing and hitting that like button or dislike button. Either way is fine with me, and just make sure you come up with your own plan and strategy. You can use this to help as a guide, and then just stick to it, follow it. And if it consistently fails you and it's not you screwing up, then you look to rework the plan. But make sure that it's the plan failing and not you. So, all right, I'll see you guys in the next video. Take care.